Now we're being joined by Seth Freeman, who's the Senior Managing Director, GlassRatner at B. Riley as well. And Seth, first things first, it's a very good morning and a busy one for us here. It's a very good afternoon there for you in California. First things first, thank you so much for joining us. I wanted to understand what is your
Thank
first
you for having
impression?
me.
Thank you. And the first impression that I wanted to understand, because there are some countries that, you have US President Donald Trump being a little more kinder to, but we've not gotten that number here. 25% is what we're looking at in tariffs. What is your first impression when it comes to this particular announcement, and what are you also making of this then?
Well, the tariffs remain very uncertain. You know, he threw out this August 1st date. Now at the beginning he said, well, there's flexibility. Now he's sounding very serious about August 1st. I'm not clear what the deal is in terms of this 25% and a penalty on India. But I would say that, and I've explained this a few times previously on your show, a concern that I've had about the level of oil that's imported from Russia. And during this entire Ukraine situation, Indian companies, Reliance, right, have been importing a tremendous amount of oil from Russia. And the president is now talking very tough, giving Russia a 10-day deadline. So I don't know if this is connected at all, but I think politically, diplomatically, this could be an issue.
Well, absolutely. Politically and diplomatically, it could be an issue. Let's see how that really pans out for us when the final sort of announcement just really comes. But I also wanted to understand what you think about the US trade deficit also shrinking at this point in time, and how do you think that really plays into the global market setup as well? Are you penciling in an impact there? What do you think it means for the rest of the globe when that happens on a larger scale? It is already happening, but when you see a continuation of this trend, what are you penciling in there?
Well, the prevailing thinking about the trade deficit, the immediate reporting about the trade deficit, has to do with the fact that many importers actually front ran the imposition of tariffs, and that this could actually be, frankly, kind of artificial, because there was just a lot of importing going on in anticipation of these tariff problems related to tariffs. This is a time of the year where a lot of goods imported from China for the holidays are already landed, or certainly in transit from previous orders. So I think that the perception of a reduction in the trade deficit is possibly an illusion.
All right, then, Seth, I also wanted to understand if you think there are any sectors that you're closely watching out for, given all of this tariff uncertainty that we have, because we've got to be looking at the bigger picture when it comes to this tariff uncertainty. Which are the sectors that are making it to your radar then?
Well, it's very interesting what's happening in automobiles here in the U.S. The companies are basically absorbing the impact so far, and even so far as the fact that interest rates are still relatively high, and the car manufacturers, the dealers, are basically buying down the rates. They're offering virtually no interest on certain cars right now, just to move cars. So, things that are imported. I know there was a discussion as we got started this morning about exports from India, mainly jewelry, and that's at risk. The other big issue is just other products that are imported. Now, I think this is going to have really a negative impact on many emerging markets that are also big exporters of resources. So it's going to make resources more expensive. It's these more broadly, oil prices are flat to expect it to decline because of supply. And there is a point at which oil extraction here in the U.S. through fracking becomes too expensive and not competitive, and that could have kind of a unintended consequence on the oil sector here in the United States.
And Seth, I've got to talk about the Fed because they've left their benchmark rate steady for the fifth straight time, in line with what you had penciled in, I believe. What do you think is likely when it comes to the September decision as well then?
Well, I was trying to bone up really fast before this broadcast, and I saw that the expectations for a rate reduction in September has gone down. Some other experts gone down from 60% to 50%. And the decision today doesn't really surprise me because it is still too early to tell what the impact of tariffs are and the continued direction of employment levels here.
All right, then my last question to you, Seth, I also wanted to understand what you think is going to be happening with the US dollar as well. What's the trajectory that you're seeing there as well?
Well, I think this is briefly a positive for the dollar, but we all know that emerging markets have really done very well in the last few months because of perceived or expectation weakness in the dollar, but expectations of continued weakness. So we might see a little bump later tonight and tomorrow.
All right, then thank you so much, Seth, for joining us and helping us out with that perspective. I believe it's a busy evening for you out there, but thank you so much for taking time out and joining us.
Thank you.